Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's a weak start to trade for the Asian markets. The Nikkei, in fact, is trading with a bit of a cut. That was down close to around 0.5% approximately. The dollar yen holding at around 110 odd mark. But even the Kospi was down. The last time I checked, it was down 0.4%. So it appears there's more red, in fact, than green that we are seeing on the markets and the Asian markets to kickstart trade. The Taiwanese index as well as the Straits. Let's get both those two up for you. More or less flattish, or in fact, trading with a bit of a negative bias. Remember, yesterday we ended in the red, but the SGX 50 is indicating a more or less flattish start just to kickstart trade. But moving on, then, foreign ministers from 20 nations are in a meeting, in fact, hosted by the US and Canada to discuss security as well as stability in North Korea. CNBC's Sherry Kang has this report.
When we could talk about this Vancouver meeting on North Korea and North Korea's nuclear program and keeping up with pressure on the North Korean regime. So the mood overall is that, yes, North Korea may be putting on a show, quite literally, but let's keep up with the pressure. So U.S. top diplomat Rex Tillerson said there are holes here and we need to fill them up. And here is Canadian Foreign Minister saying the goal is really still the denuclearization of North Korea. Take a listen.
These are encouraging signals. But let me be clear. No true progress can be made in addressing instability in the Korean Peninsula until North Korea commits to changing course and verifiably and irreversibly abandoning all of its weapons of mass destruction.
And like I said, despite all these developments that we've been seeing so far this year, with the two Koreas talking, with North Korea sending a lot of people to the southern part of the inter-Korea border for the Olympics, well, Japan's Japanese officials are saying, let's not get naive here. Take a listen.
What we should have in mind is that North Korea continues to advance its nuclear and missile programs, even as we speak, and we should not be naive about their intent, nor should we be blinded by North Korea's charm offensive.
Okay, all right, that's all what's taking place with North Korea, but let's tell you specifically what took place on Wall Street. US stocks closed lower, pulling back from those record highs as investors weighed the possibility of a government shutdown. The Dow ended 10 points lower, posting what was its biggest one-day reversal since Feb of 2016. The S&P 500 and NASDAQ also ended lower in yesterday's trade. CNBC's Contessa Brewer gets us a wrap of all what took place.
Wall Street today swinging nearly 400 points. The Dow hitting 26,000 for the first time ever before reversing to close down 10 at 25,792. Political headlines were driving those moves. Congress needs to pass a spending bill by Friday's end, but lawmakers are using it as leverage in their back and forth arguments over an immigration fix. As a result here, investors are feeling some jitters over the prospect of a government shutdown, and it led to one of the biggest one-day reversals for the Dow since February 2016. The VIX, which gauges volatility in the market, rose more than 15%. United Health boasted better than expected earnings today on sales, and it gives strong guidance here for 2018 because of the tax reform law. That stock ended the day up almost 2%. And Citigroup announced an $18.3 billion loss in the fourth quarter, accounting write-downs related also to the new tax law. That basically negates the company's profit for the whole of 2017. Still, the company reported earnings that surpassed estimates. Shares ended the day slightly positive at 77.11. You know, big banks here are largely reporting these paper losses, but they're preparing for gains in the long run because of the tax reform.
Okay, so that's what happened in the U.S. markets. On that note, let's get in some global opinion from David Bianco of Deutsche Asset Management on the road ahead.
We think 2018, it's unlikely to pay off to be tactical. We're focusing on our sector and our global allocations with equities. We're still very much overweight equity, 65% equity allocation. I think what we are right now, we're at the stage where bears are atoning.
Right.
I've been bullish almost all of this cycle, but it's been a market difficult to buy. And at this stage, our advice is there's 2-3 more years left of a healthy bull market. It's not too late. It's not the valuations that bother us, and the economy is healthy. It's healthy.
Not the valuations.
It's not the valuations. They're supported by low interest rates, which we think is sustainable, low interest rates. What bothers us is that the market, another statistic, this is a 50-year record now since the S&P's gone without a 5% pullback from its one-year high. It's been this straight-up market ever since the fourth quarter of 2016. That's given us some pause for concern.
All right, then, turning our attention to the European markets. The FTSE from the frontliners was a relative underperformer. We had the CAC as well as the DAX ending with gains. In fact, if you say the FTSE was the underperformer, then the DAX was a relative outperformer. That ended with a gain of more than 0.3%. We had a fall in commodity prices overnight. That weighed on sentiment as well. But if you're looking for green, then you look at some of those peripheral indices. The ATHEX, for example, that was up more than 0.5%. I think the IBEX as well ended with a gain of close to around 0.5%. But the Italian index was mildly lower in trade. If you're taking a look at the emerging market basket, well, it was more or less mixed. The Brazilian and the Russian index should be up for you on the screen. Both of them moved in opposite directions yesterday. The Brazilian index recovered from the low point of the day, while in fact the Russian index ended with a cut of more than 0.2%.
And in the currency space, we have the dollar, which is edged lower, weakening against a basket of major currencies, while the euro has inched higher following news that the ECB might not just adjust its policy stance at its January meeting.
Okay, then turning our attention to the world of commodities, and oil prices edge up after retreating from the highest levels we have seen in nearly 3 years. Brent crude prices trading just shy of the $70 a barrel mark. Remember, robust global oil demand as well as continued OPEC-Russia production cuts. That's what's really supporting crude oil prices.
Okay, well, let's move away from equities. In fact, it's a bloodbath as nearly every major cryptocurrency has suffered massive losses in the last 24 hours. Bitcoin briefly dropped below $10,000 on Coinbase, which is the leading US marketplace for trading cryptocurrencies. The sell-off is believed to have been triggered by comments coming in from the South Korean authorities indicating tougher regulations on digital currency trading. Well, let's get talking about the cues and news you need to know for today's trade. We have Naveen who joins in to tell us more of what we can expect. Well, Naveen, yesterday we did see profit booking come through for the markets. What's the setup like this morning?
So as you clearly pointed out, Ekta, yesterday we saw some bit of a profit booking mainly led by the IT index, mainly led by the mid-cap index. Remember, the mid-caps underperformed or down close to 2%. But the sigh of relief came from the IT index. So this time we'll have to see in terms of how much of vulnerability we see in the mid-caps. Talking about the institutional flows, yesterday was fairly positive. If you see the FIIs, both in the cash market as well as the stock futures market. In the cash market, they bought in close to 700 crore, while in the stock futures, they bought close to 880 crores. DI sold an amount close to 250 crores, but nevertheless, the FII buying, that was compensated for. But as I was pointing out, mid-caps, yesterday's vulnerability, that seems to be expected to continue given the fact that there are almost 15 stocks which are in the FNO ban. So keep an eye on the index as a whole. The other point being that the Nifty put-call ratio, that although it's not at those 1.8 levels, but still on the higher side, close to 1.66 levels. So this is also something which indicates that there will be some bit of a volatility. Talking about the levels now, remember 10,750 call, that added close to 5 lakh shares. So keep a upside resistance of close to 10,800 levels around, because the premium over there is around 47 rupees. And on the downside, there will be a band, I believe, around the 10,650 levels, given the fact that the 10,700 put, that has shed close to 4 lakh shares, and the premium over there is 67 rupees. So the band we'll be working around will be around that 150 points mark. On the upside, 1,800. On the downside, 1,650. On the other hand, talking about the global cues, nothing much to talk about. If you see the European indices, they ended in the green, but Dow, that was more or less flattish, and the SGX Nifty today morning, that is also indicating a flattish opening for our bosses. Back to you.
Okay, all right. Thanks so much for that, Naveen. But give us some stocks that we can focus on in today's trade, Naveen.
So, okay, the big boy TCS, that will be clearly in focus given the fact that the company has signed a deal worth $690 million with MGM Prudential. And remember, this is especially in the BFSI space for a period of 10 years. This comes at a time when recently, if you remember, a week back, the company had indicated that BFSI as a segment has been seeing some traction, expected to see some traction, in fact, in the next 2 to 3 quarters. On the other hand, Sun Pharma, some settlement of patent litigation for their generic Linzess in US. On the other hand, Texmaco Rail also will be in focus. The company has been setting up a food facility as well as a logistic park in West Bengal. So keep an eye on Texmaco Rail. Capacite Infra, the stock has already run up post its IPO. Now we understand that there is a rating upgrade by India Ratings. The rating upgrade is to India Ratings A versus India Ratings A minus earlier. Quite a few numbers have started trickling in for Q3 of FY18. I'll begin with Agrotech. Fairly decent set of numbers. The revenue growth, that is something which I didn't like because it was up just 3%. If you see the historical trend also, nothing much to take home or talk home about. On the other hand, margins, well, there we have been seeing some improvement, majorly led by some cost cutting that the company has been doing. Margins have improved by close to 400 basis points. So that comes in as a positive. One of the most expensive stock in the dairy space, but now the company has been posting a lackluster set of numbers. Revenues up 7%. Though if you see the operating margins, they are down close to 150 basis points. Expect the stock to be in red in today's trade. Also, Jai Bharat Maruti is more or less inline set of numbers. Revenue seems flattish, but the jump has been seen in the overall operating margins. That has jumped by 880 basis points at 8.3%. So expect the stock to be in the light green in today's trade. Back to you.
Okay, all right, Naveen, thanks very much for that. But India should make it easier for new banks to open in the country, according to a new report from the Brookings Institute. In a CNBC exclusive, co-author of the report, Iswar Prasad, believes there is enormous gains to be made from productive reallocation of capital as inefficient banks are driven out of the system and new banks are allowed to make an entry. Here's a slice of this CNBC exclusive.
The banking system is still the dominant part of the financial system in India, and it's largely driven by the public sector banks, which have a huge overhang of non-performing loans. Some of these because of the banks, imprudent lending. Some of it because of government policy requiring these banks to lend to what we call priority sectors. The government is trying to get the banks to behave better in terms of more commercially oriented lending, but it has to recapitalize them. What is really important is to make sure that once the books of the banks are cleaned up, there are governance reforms in place that make the banks operate as more rational commercial ventures and to allow for easier entry of other banks into the banking sector.
Well, Brookings also echoed sentiments similar to the International Monetary Fund in calling for privatization of weaker state-run lenders.
I don't think complete privatization of the private sector banks is going to happen right now. The bigger issue is just cleaning up their balance sheets, getting them to operate on a more commercial basis and start increasing competition, including perhaps by selling part of the stakes of these private sector banks to private owners. I think having alternatives to the banking system is an important priority for emerging markets like India and China, where there is a large pool of domestic savings and some foreign capital coming in as well. But the domestic banking system is just not doing that great a job of intermediating these funds.
Now, on the GST front, at least 10 states are undertaking trial runs to check whether or not their systems are equipped to handle the flow of e-way bills. The trials come 2 weeks ahead of the pan-India rollout of e-way bills. CNBC TV18 learns that at its next meeting, the GST Council may announce measures for a smooth rollout of the e-way bill system. This will include a 24/7 centralized help desk, a troubleshooting mechanism, as well as a pan-India system to verify authenticity.
Okay, well, more from the GST space then. Hindustan Unilever has received an anti-profiteering notice. The company has told CNBC TV18 that it will respond to the notice after going through the details. HUL has also said that it is committed towards ensuring that all benefits arising from the reduction in GST rates are in fact passed on to the consumer.
All right, then, and Prime Minister inaugurated the HPCL's Barmer refinery yesterday, and Anshu Sharma caught up with the CMD of HPCL, Mr. Surana. She started off by asking him about the size and the investment of this new plant. Here's a slice of that conversation.
Bardmer refinery is a 9 million metric ton capacity refinery which will have a petrochemical of around 2 million metric ton. The investment is around 43,129 crore and we are targeting the completion by financial year 22-23. This is the first time in India a refinery is coming along with the petrochemical right from the inception. Normally the petrochemicals get added later on. So to that extent, the first integrated refinery come petrochemical complex in real sense. The another good thing is this will be the refinery which will be coming up with the BS6 specification fuels right from day one. Not only that, it will also produce 95 octane petrol, which is a premium quality petrol in terms of the quality of the petrol is concerned.
So crude is at 70. How does it impact a company like you? How will it impact the refinery margin? Where do you see crude heading from here onward since it is already at 70?
In the last few days, the crude has shown an upswing. In the past, we have seen there is a resistance around 70 level. So it rebounds from there. I have told earlier also on your channel that as far as the refinery margins are concerned, it is a function of not just the crude prices, but the crude prices and the cracks. But of course, in terms of fuel and loss, a higher crude price does impact the GRMs to some extent. As far as the total crude price movement is concerned, structurally, if we see, there is a resistance around $70 or $69, and we have seen in the past also rebounding from there because as soon as it goes above that, the US shell companies start coming in the play and it increases the supply positions. But that is the pure structural play. The geopolitical disturbances, if it comes, like something going in Iran or something going in Middle East countries, that creates a momentary swings in the crude prices.
Right.
Now we need to watch out whether these are the momentary swings and which stabilize at a range of 65 to 70, which looks to be a more logical range, or the geopolitical situations continues in sequence or more than once or one after the other, which keeps on having a sentiment which makes the traders to take the positions.
There are reports that OMCs have been asked to go slow on daily pricing. How much is that true, and what will be the under recoveries?
No, as far as daily pricing is concerned, the government has allowed the daily pricing sometime back on petrol and diesel.
Right.
And we are also conscious of the sensitivity of the consumers as far as the petrol and diesel market prices are concerned. So we need to balance between the consumer convenience as well as our own economic health of the companies. Government also taken earlier certain steps in reducing the excise duty. So there are three main stakeholders: the government, the consumers, and the oil companies. All three budgets have to be managed in a proper balance. So neither can be compromised at the cost of something else. But we need to see that which is the way, which is the best optimized position can be obtained.